Hi everyone, great to have you tuning in to this series of the Investor Talk. And in this episode, we have Jie Lun here with us. So to introduce, Jie Lun heads the Ventures team for Plug and Play Asia Pacific, sourcing for startups within the Southeast Asia region, including matchmaking startups to corporate partners, as well as identifying potential startups for investment. So Jie Lun, can you start off by sharing more about yourself, your passion, your previous work experience?
Hi everybody. Jie Lun here from Plug and Play. So I guess the question will be how I got into this industry, right? And my experiences with Plug and Play so far. I guess how I got in was a bit random actually. I was before joining Plug and Play, I was sort of in this technology federation. It used to be called SITF, which stands for Singapore Infocom Technology Federation, right? And now it's called SG Tech. But in that sort of organization, I was tasked to manage the startup program, whereby we partnered with then called iGEM, which is a grant for startups. I think right now they are called SG Founders Grant. And basically what I do is, sort of match these startups with the investor mentors within our network, and to also facilitate the entire pre-seed funding process. So it was through that job that got me connected with the startup and VC ecosystem. And that got me sort of connected with Plug and Play, and so I applied for the job when they are searching for a program manager for the SPH Plug and Play Accelerator, and that's how I got in. And I think the initial sort of few years in Plug and Play was managing the program, right? So not so much on investments per se, but more accelerator operations, program management, and things like that. But after the program ceased, I sort of transitioned into a more operational role. And then after that, I kind of also transitioned into a more ventures related role. So right now I oversee a team across Southeast Asia. We have a presence in Manila, in Jakarta, and Bangkok, and I oversee the team's efforts in sourcing for startups to connect with corporate partners, as well as the investment part of the operations. Yeah, so that's in short how I got in and my experience so far.
Throughout the years of being in Plug and Play, you definitely have seen and worked with many startups seeking funding at various stages. So what are the three main factors that most investors actually look out for in startups?
I guess different VCs have different criteria. But for us, I think it's very simple. We call it the 3 T's, right? So there's team, technology, and traction. So I think if you are familiar with the terms, it will be quite self-explanatory. But if I were to sort of go into it a little bit further, team would represent, of course, the team that is running the company. We look at the co-founders, who are the core team members. Are they qualified? And are they experienced enough? Do they have the right networks to, or the domain expertise within the industry that they are running the company in? And the second thing is, of course, before we go to the second thing, the team, right? Besides domain expertise and knowledge, are they passionate enough? Are they sort of more driven to run the company? Because of course, starting a company is not easy. Do they have the persistence and the drive to actually see it through? And then moving on to the second thing, of course, technology. We look at the product itself, whether there's a significant technology barrier, whether it's the technology, of course, helps in terms of the defensibility of the solution. whether it's easily copied or is it unique enough? Does it have a differentiation between competitors out there? So that's the technology part. And the third thing is traction. Of course, traction is I would say is good to have. It's a risk mitigating factor for us because with traction, it means people are spending money to sort of buy your product or they are using your product, which means that it's validated in that sense. So if you see traction and there's growth in that traction, that sort of tells you that it's the startup or the business is significantly less risky, I would say.
Just now, right, you emphasize on team a lot. And I understand that teamwork is definitely one of the most important factors that investors actually look out for in startups. So to you, what is the most crucial leadership skill that you have learned, and how do you actually suggest to CEO or co-founder of the startup to apply it to their own startups?
I guess it would be leading by example. I think that's the most obvious leadership skill that anyone could have. Like, of course, if you are leading a company, you should be the one that is most passionate and most driven to want to succeed, right? And that energy and that passion will actually influence the team members around you. Similarly, that passion and that energy is influential in terms of you recruiting critical and core team members, right? So one of the factors that we look at is also is the CEO or the core, the founder able to recruit talented individuals to join his startup, right? And often we see, because startup is something that is new and highly risky, talented people are usually more tempted to take a full-time job in a big company with high pay. So why would they join a startup? So the only reason is that the founder is able to convince the individual with his passion and vision and everything. So that boils down to leading by example itself.
Like the part on gaining traction. So at this point, right, I want to zoom in on the third T that you mentioned, which is traction. So understand that like startups usually start with like no or low capital. So to attract investors, they often have to gain at least some traction here. So here then comes the problem of the chicken and egg problem of building credibility and having a prototype to get potential users interested. So how do you design a go-to market strategy in such situations? Or what do you actually recommend startup to focus on at the initial phase?
So the chicken and egg problem is something that is very common. I would say that at an initial stage, of course, when nobody knows about your company or your product, the basic thing to do is to get sort of like an MVP out and test it with a few people that you identify as your sort of early adopters, or the most hardcore fans. And these people are the ones that feel the pain the most. Is the exact target audience that you are having the product to solve their problems, right? So having that sort of early MVP out, testing it with a bunch of users, getting their feedback, refining the product as it goes along, that kind of helps them that helps you in terms of getting feedback and developing something that actually people want before you actually sort of launch to the general public, right? And that kind of gives you some data in a sense of whether your product is viable or not before you kind of release it to the public, right? So if you're able to test with a subset of sort of early adopters, and you manage to kind of convert them into paying customers in the initial phase, that kind of solves that chicken and egg problem, right? You have a small set of hardcore users that are paying for your product. You can then go to the other customers and say, hey, this is a product that I've tested with these people, and they've validated that this solves their problems and things like that. That helps you convince other customers to come in, and that builds your traction within that product. And of course, in this scenario, I'm talking about a B2C product, right? So if it's a B2B product, it's another sort of process. And I guess how it goes is, you have an initial sort of product where you go to a corporate or a business to sort of engage in a pilot. And usually these pilots are sort of you offer some kind of a discount to it, so that it kind of tests, sort of get people to come and test your solution and product. And of course, after a few pilots, you gain that traction and you gain that credibility, and then you can, launch a product and sell to the other companies.
Actually, what you just mentioned brings me to the point on sometimes those founder, or rather the founding team, they are so focused on what they have to offer, and they believe that they won't be able to scale their platform or their company. But what they might be blinded to would be how other people see what they are offering. Like, perhaps you can share with us what's the process of assessing whether a deal flow is viable, sustainable, or even scalable in the specific industry. Like, what are the things that make investors want to continue being with the startup in the long term?
Well, in terms of process, I don't think, for us at least, we don't really have like a set process. It would be more like, I think fundraising is a very relationship-based game, right? So it's, for the startup, it's kind of like dating, right? So you have to, identify who are your investors, and your investors are like partners, right? So you have to sort of identify who are these people, do research on each of them, identify those that are more likely to be interested in your product, and then go through the process of casting the net, see who actually replies, and building the relationship from scratch. So that's for the startup side. But for the investor side, it's also kind of relationship management as well, right? So the best deals are actually referrals from other entrepreneurs or other VCs and things like that. So without a good reputation, or without a good relationship with the other ecosystem members, it's very hard to identify good deals and in fact end up investing in them, right? It's not so straightforward. So we don't really have a process, but it's more like developing a funnel and a pipeline where you keep in contact with the deal flow that you have. Of course, being really upfront with the startup, not wasting their time. If let's say you're not interested, just say that you're not interested. But of course, the whole process would be about how you develop that relationship with the company and get to a point where both sides are really comfortable with each other, and that you can actually work together in the long term, right? Because investing in a company is about the long term, right? You're partners with that company till at least you exit, right? An IPO or a trade sale. So it's more like developing that relationship till both sides are comfortable with each other, and then you make the investment.
Actually, have a follow-up question for that. You mentioned that this is a very relationship-based kind of investor startup relations. So here comes the question on how often do you think that startup founder and investor should meet, like right after funding? Because I understand that some investors, they are going to be far more labor intensive than others. Yet startup would also not want to be weighed down by micromanaging by his investors as well. So I mean, there should be a good amount of interaction, right? So what's your thoughts on this actually?
Yeah. So of course, well, I guess entrepreneurs and investors, they're all very busy people. So I wouldn't say both sides or the startup should be very pushy. I would say that depending on the investor, you have to gauge whether he's somebody that is that needs constant updates, or he's somebody that is okay with a monthly check-in or a monthly update. But I would say for startups is that you should develop sort of like a relationship management process where you identify who are your hot leads and your warm leads and your cold ones, and of course the interactions will scale accordingly, right? So for the hot leads, maybe you have more touch points with these investors, having like a weekly check-in or a monthly check-in, updating them on your progress, or have regular sort of meetings, calls or coffees and things like that. Whereas for the warm ones, you can just send an email from time to time to just keep your startup in their minds. And for the cold ones, just less frequent, of course, right?
What you're saying that, like, depending on whether the level, or rather the opportunity, the percentage of opportunity whereby you guys will be working together, then you decide on whether you want to spend more time with them.
Yes. So I would say depending on the investor, whether they are more needy in that sense, or and the other factor is on the potential of them actually coming in, right? If it's a high potential one, then of course you have to double down in terms of the cadence and efforts.
Right. So meaning like before a investor actually decide to work with the startup, and before the startup decide to work with the investor, all these actually have to be put in place. Like how often do you want me to update you on my progress, and on the investor side, whether or not the investor is able to provide like connections, mentorships for all these startups.
Yeah, definitely.
So I have the last question right here. What do you see in NUS Angel Venture that actually interests you to be part of NAV?
I guess it's I would say at the initial phase, it was the passion of the founders of this sort of organization. They've invited me to some of these. I guess it was a course or something. I can't remember, where I was kind of like just doing a one-off mentorship kind of thing. And of course, we kept in touch. And then, of course, subsequently, when NUS Angel Ventures sort of kickstarted, they contacted me again and asked me if I would like to join. And the first thought was, yeah, sure, because I'm an NUS alumni, and I'm within the ecosystem, the startup ecosystem, as well as the VC ecosystem. I guess one factor is about giving back to my alma mater, and also about sort of it is always nice to kind of like share my learnings and my sort of experience with younger generation. So the giving back part is one factor. The other factor is part of my work is also about finding startups, investing in startups. So this is also synergistic to what I do. It's a deal flow as well, so it's a win-win thing. So that's why.
Thank you, Jie Lun, for sharing your thoughts and tips for startups. So we have come to the end of this session, and if any one of you have any more follow-up questions, feel free to send your question to our email, and also do connect with Jie Lun on LinkedIn and reach out to him. Thank you, Jie Lun, once again.
Thank you.
Thank you.